Hey, what's up, guys? Let's have a look at the live stream right here. Yeah, all good. Okay, let's start. It's June the 16th, and we're faced with a massive dump. So, what has gone wrong in the past few weeks? Actually, in the past week, Bitcoin and Ethereum have dumped far below the support we were talking about in the last stream. Um, for Ethereum, since we've already brought up the chart, uh, it has dumped below 1,700 and has continued to dump. Now we're at 1,100. So what does this mean? So Ethereum has gone through a bigger dump than March the 11th. So March the 11th, that was the COVID dump, which led to the big bull run later on. I think it was a catalyst event, but it was definitely a an event with cascading effects. Uh, Many stop losses, many liquidations. So in that respect, it is very similar. It is very similar to uh, March 2020. Very similar to that dump. So in terms of how much we've dumped. March 2020, we dumped 69%. This dump, if we count 3,600 as the top and 1,016 as the bottom, we've dumped 72%. So we've gone beyond the March 2020 dump. And in terms of Elliott wave theory, it looks as though we're going through an extended third wave. So as of now, I still believe we're in a Elliott wave correction, and this is the C wave. For us to be sure this is the C wave, the price within the next few months needs to get above 2,100. So, for example, if we somehow pump to 2,400 within the next 2 months, that means this is the C wave and we're going to see an upwards ABC correction. But if we just pump to, let's say, 1,600 and continue the dump, that means it's a five wave correction. So we're waiting for that confirmation. Uh, as for personal opinion, I prefer using the uh, linear chart because on the linear chart it looks as though we've completed a an ABC correction, and the ABC correction is pretty much one to one, right? So if we correct these levels, 900 is the support, but it's not um, sure that we'll get to 900. But visually, you can see this dump is pretty much equals to this dump. But it's not to the right ratio, of course, because from 4,800 to 2,200, that's only just about over 50%. But from 3,500 to 1,100, that's a 70% dump. So uh, on the linear chart, it looks like a one by one. Okay, so uh, from this chart, I'm still believing it is an ABC correction, but this is an extended wave three. Uh, if you've watched the last live stream, you would remember we targeted 1,200 to 1,400 um, as the final target. But we believe that the price may go to 2,400 first and then dump. But that has been sped up by some cascading liquidations uh, in especially Ethereum, because Ethereum is a highly leveraged market. What I mean by that is people are using Ethereum to buy other things. They're using Ethereum uh, to farm yields. They go yield farming with Ethereum. They go Ethereum 2.0 staking on Lido. They do a lot of things on Ethereum. So uh, the difference between Ethereum now and Ethereum in 2017 is principally that now the whole crypto market is pretty much on leverage. Even these big funds we were talking about, like Three Arrows Capital, right? Um, and there are many other uh, providers for DeFi, right? Centralized providers, CeFi, DeFi kind of things, like Celsius. Probably on Celsius or on Aave, a lot of the big money is just big funds like Three Arrows and maybe Justin Sun. So it's highly centralized. I mean, others do stake their coins on these big platforms, but they're relatively small compared to the big guys, right? So the whole market is on leverage, even the big funds. And to make matters worse, we've had tons of losses from Luna, the crash of Luna. And that has had a devastating effects on some of these funds, making them insolvent, right? So in in the respect of Three Arrows, uh, they lost a ton of money in Luna, and the Luna Foundation had a chunk of their Avalanche tokens, and they had to dump those Avalanche tokens, which caused more losses for Three Arrows. And their Ethereum position was partly liquidated. Um, so yeah, so how bad is it? It's pretty bad. I bet like the fund I don't know if it has blown up totally or not, but it's definitely they've lost clients' money. Most of the funds in Three Arrows Capital is clients' money. It isn't their own money, right? So they're going to be faced with a ton of flack, for one. Second of all, there will be people wanting their investment back ASAP. So it's like a fight to get the money out of Three Arrows, right? So obviously, not everyone can get out. Maybe the ones closer to the founders or the ones with bigger losses will get out, but probably smaller players will not get out. That's usually how things go to avoid big like legal issues, right? So what's gone wrong? I think these big funds, first of all, they made a mistake with Luna. Um, it's obviously a super risky asset from the start, and they put a ton of money in it, which is relatively strange. So this shows that even in crypto, these big funds, they're not gods. They're not gods at all. They are um, they're pretty much really rich crypto traders. It doesn't make them extra smart or extra risk adverse, right? Um, it just means that they have a ton of money and maybe they're smart when things are good, but when things are bad, uh, the shit can hit the fan. So um, I think that's taught us a lesson. So what have we gone through? We've gone through Three Arrows getting liquidated, partly liquidated. They have tons of positions on DeFi. On I don't know if they're on Celsius. They should be. They have calls on Deribit. I think the boss of Three Arrows, Suju, is also um, the boss of Deribit Exchange. They had money on Luna, which pretty much got blown up. So yeah, that's Three Arrows, and then we've seen Celsius. Celsius hasn't blown up yet, but Celsius has paused withdrawals, which is concerning. Which means they may have been liquidated partially, and they're sorting things out. Um, And then we've seen Coinbase laying off 1,000 employees, which is a lot. But Binance, on the other hand, have hired 2,000 employees. So I think it's just a move in a different direction. Obviously, the US, being Coinbase's main market, uh, isn't doing so well in terms of crypto regulation and also the general use or trading of crypto. Because to open an exchange or trade in the US, you need a license, and not many crypto exchanges can get this license because they have securities, and these won't be ruled as just tradable things by the SEC. So I think going global is definitely the way to go, not sticking in one single country. So that's on the exchange front. And what have we else? What else do we have? So we have MicroStrategy. Their Well, it's rumored that their Bitcoin position might get liquidated at 20K, right? We've heard this before, but they said that their position will be liquidated only at 3K. So it's hard to say because it's OTC, it's OTC, it's not DeFi. So basically, they borrow money from a bank. They have they should have BTC as collateral, right? They borrow money from the bank and they buy BTC, use the BTC as collateral to borrow more money from the bank, something like that. Well, it's pretty much uh, borrowing money from external entities to buy more BTC for themselves. And there is definitely a margin call price, but they have 24 hours to fulfill the margin call. So if they get margin called, they have 24 hours of time to prepare enough money so that they don't get liquidated. So it is less risky than DeFi. DeFi, if the price drops below a certain point, like an Aave position, uh, that can be instantly liquidated, as opposed to giving you like a 24-hour time frame, right? So uh, yeah, so this is Ethereum. Looks like an ABC, no problem. Um, in terms of uh, Elliott wave theory, I think the third wave here is it looks good. It looks good because it looks as though we've had a five wave correction, and this fourth wave is a classic fourth wave because it's kind of sideways. It's really long and tiresome, and uh, and then the fifth wave down. So we don't know if the fifth wave has reached the bottom yet, but I think there is a chance of possibly 900. But I don't think it will hold. It will hold below 1K for long. So in terms of a risk reward perspective, I mean this asset was uh, just a month ago, really, right? Just more than a month ago, like 40 days ago, Ethereum was worth 3,500. And now it's worth 1,100. Why aren't you buying? You should be buying this like crazy because this is the supercomputer of the decentralized world. Um, and the merge is on the horizon, right? And it's the biggest decentralized network. So why aren't you buying at 1,000 as opposed to 3,500? Well, because the perspective of risk is totally different for a lot of people. People think it is less risky to buy Bitcoin above 3,000. They think, wow, things are bouncing, things are good. 3,000 plus, yeah, I'll totally buy Ethereum. But at 1,000, just above 1,000, like 1,100, all of a sudden people don't want to buy Ethereum. So I don't know what to say. Well, I'm buying here. I bought at 1,800. I bought at 1,700. I bought at 1,590. I bought at 1,420. I bought at 1,250. and I don't care. I'll just keep buying. But remember, never go all in. Always buy spot, but never go all in. Why? For example, my strategy of buying is I keep my portfolio at 60% spot, 40% USDT. So what I do is I pretty much started buying Ethereum at 1800, and once prices started to drop, every day I bought a bit more. I bought a bit more to top up my spot holdings. So, for example, if you buy 60% spot at, let's say, 1,700 average price, um, and the price drops 20%, right? Then your 60% holding is worth less as a percentage. It may become like 50%, right? So then you can add 10% of your USDT into your Ethereum or whatever position to make it 60% again. This is how mathematics works, right? So if it drops again, you can top it up again. Keep it at 60%. So you always have enough capital to pour in to average in. Okay, it's not about picking the absolute bottom. It's about averaging in. I mean, this asset was worth $4,800 just 5 or 6 months ago, right? And now it's at $1,100. So I don't see the problem with buying here, to be frank. Um, but if you're opening futures positions, there's definitely risk involved because we've dumped so much and Ethereum is cheap now. Remember, Ethereum at $1,000 is going to be more volatile. Why? Because the market cap is smaller. Secondly, because the price is cheaper. If Ethereum pumps by $100 at this level, that's 10%. And that can liquidate uh, 10x shorts, right? If it dumps $100, that can liquidate 10x longs. So it's highly volatile and risky at this level to trade futures. So still, okay, so below 1,700, I don't see a single problem in buying. Um, if we're looking at Bitcoin, oh, actually, let's have a look at how Ethereum is doing compared to 2017. So if we get rid of all of these lines, if we compare Ethereum to over here, um, it's possible that we are, where are we? Okay. I'm comparing I'm comparing this part, okay, to this part. And I'm comparing this bounce. Okay, so let's clear that up. I'm comparing the first dump to the first dump over here. So that was from 1,400 to 500. That was the first dump. And then the bounce was from 500 to 900. Okay. Um, and yeah, so this is the first drop. And then the bounce was from 2,000 to like 3,600. So, this fractal is a bit hard to draw. Maybe we'll go to the 2-day chart. That will be better. Um, so I'm comparing some of these moves, but markets never do the exact same thing, and it's not doing the exact same thing, right? There's definitely more dumping here, and it's taken longer. So I think there are some similarities, but there are also some differences. So this is the first dump, this is the first dump, right? And then there was this correction. There was this correction from 500 to 900. That was a 2x correction. Here it's kind of similar to that. So let's just draw that. And then we see the third dump, which is a bigger dump. That was from 1,000 to 300. And here it's pretty much the same deal. So we've dumped pretty much 3x. Um, And the next move was a big bounce. So this is still what I'm thinking of here. We find some kind of support here, maybe at 1,000, maybe at 1,100. By the way, if you look at the Fibonacci retracement levels from the top to the bottom, we're actually at the 0.786 at 1,100. So if we bounce from here, most likely target is 2,400. So if we get to 2,400, it would be time to offload some of the Ethereum, and there would be possibly a correction downwards and then another pump upwards. That's what I'm thinking. So if you zoom in on this section here, clearly, if you draw a trend line, if you draw a channel or a trend line here, you can see, let's see, you can see we've pumped through this trend line to get everyone excited. And I remember here there was a lot of altcoin price action, which we haven't seen yet, right? We've just seen everything dump. We haven't seen any altcoin alt season. So if we draw a similar kind of channel here, then it's around here, right? Or we can just draw the upper trend line. If we do this, it's possible we bounce to 2,400, rebound a bit, find support at the lower area of this channel, which will probably be around 1,400. And then from there, we may see a third wave up. So this is the first wave up, second wave down, third wave up. Third wave up should take us to 3,000 to 3,700. So in a linear chart, it would look like this. So we should go through some kind of midterm correction in that we're going to see a short-term bounce. Ethereum being so cheap, it's very easy for it to 2x. It's not very easy for it to 2x when we're at such a high level, but we've dumped 70%, which means we've dumped 3x in 1 month. I don't see going up 2x as an issue because we've dumped 3x. We're down 3, up 2. So that would be totally normal, right? So down 3, up 2, and then possibly another correction. So this is what A, B, C. And the C wave, I'm looking at 3,000 to 3,700 as a target. And that would correspond with over here. So if you look over here, it looks very similar to this, right? It looks very similar. It's also it looks like a downward wedge, a descending wedge. Here also looks like a descending wedge. And there should be this upwards price action that will take us to some high point. And then we may do this and dump downwards, right? But obviously, I don't think it will take that much longer. I think we may get to the bottom in 2023, and the bottom should be around 300. I don't think we'll go to like 80 or anything, but I think 300 is a real possibility. So 300 is around here. So I think there are some big moves incoming, and my main rationale for this being the bottom is we've blown up the funds, we've blown up DeFi, and we've dipped 3x. So in terms of a drawdown perspective, we've gone down 82% from the top, and that's a big drawdown, first of all. Second of all, we've seen big funds and big CeFi, DeFi things blow up, and I think that is actually bullish, a bullish deleveraging of the market. So once this leverage has gone from the market, I think there'll be some buying, some bids coming in, buying this coin up. And who knows? I mean, there might be a white swan, like the war ending in Ukraine. There might be a white swan of China banning NFTs. because whenever China bans something, the price dips a bit. So they could ban NFTs at 2,400, price dips, and then we go to the moon. So it's totally possible. Um, yeah, so that's the general idea for ETH. And yeah, ETH, I believe ETH, we're at a bottom here, judging by the waveform. We've done an ABC correction, right? And we've hit the 0.786 fib. So judging by this, the short-term target, well, the short term, I mean like midterm, within the next month or 45 days, we're going to get to 2,400, most likely. And then after that, there should be another dump, maybe some FUD out of China, banning of NFTs, whatever, right? But like the people will make this kind of FUD up. And then we'll probably dump like another 40% from there. And then we'll find some kind of support at 1,400. And then possibly later this year, we'll get to 3,000. So I'm playing the bounce here. I've bought all the way down here. So pretty much this circle here is where I'm buying, right? And my averaged in price is around 1,650 right now. So as soon as we get above 2,000, I'll be selling things. I'll be selling Ethereum above 2,100 pretty much. Okay, so that's Ethereum. Let's go to Bitcoin. Bitcoin is very similar. And there's another thing you must check out, which is, oh, wait, let's see. USDT.D. So what is USDT.D? It is an extremely useful top and bottom sniper. So USDT.D is basically USDT dominance, right? Wait, let's change this to logarithmic. And clearly you can see some sort of channel here. And every time we get to the top of this channel, it is a local bottom or top. Let me show you what I mean. So 2019 June, we hit a top of 14,000, right? And at that time, USDT.D was at the bottom of the channel. And the next time there was a bottom or top was March 2020. And USDT.D was at the top of the channel. So we can see that whenever USDT.D gets to the bottom or top of the channel, that corresponds with a top or bottom. Okay, so if USDT.D is at the top of the channel, the price is usually low, is usually a good buy. The reason for this is I think this channel clearly shows a money flow. Whenever USDT.D goes to a certain level, that money will flow back into spot crypto, and there will be less dominance in the USDT market cap as opposed to the total market cap. So USDT.D is basically the percentage of USDT's market cap in the total crypto market cap. So it is at 8.1% now, which is quite a high level. Some other places we can spot the 60K mark, right? And then there's the bottom at 30K, at 28K actually. That was May 2021. And then in so this was 69K, USDT.D went down to 2.5%. So that was really low, right? And now USDT.D is at 8%. And I think we're pretty much at the top of the channel. It depends on how you draw this channel, right? You could draw this channel like this to include this top, and the other way would be to like kind of average it out a bit like this. So we're pretty much at the top of the channel, right? So this would correspond to a bottom here, and I believe the money should flow back into crypto, back into crypto. And once we get to like 3 or 4% in terms of USDT dominance, that will be the next top, and that should correspond with like 48 or 53K. Okay, so that's pretty much all for today. I have another Twitter space to do, so hope this helps you out. I mean, bear markets aren't easy. You cannot always buy the absolute bottom, but the trick is to average in at an average low price. Okay, there's no point in just buying and just feeling scared and selling, right? That will cause actual losses. But if you just average in and the price dips a bit below, that's fine because they're paper losses. If you don't sell, you don't lose. I mean, that sounds kind of stupid, but you know, if you're dealing with Ethereum, Ethereum isn't going anywhere, right? It's the future of the decentralized Web3. So I think we should have faith in the coins that deserve our faith, and not feel too scared. So that is all for today. Thank you for listening, and we'll see you on the next one. Bye bye.